Hello. So today's video is going to be my talk about why I am fading Jeff Gundlach. Gundlach. For those of you who don't know who Jeff Gundlach is, he is referred to as the bond king, the new bond king. He runs a very big bond fund, manages in the multi-billions, hundreds of billions, I think. And of course, he took over that title from Bill Gross, who, I mean, if you've been following me and my writings over the past, 5 years, you know that I predicted Bill Gross, I predicted his demise, way back in 2011 when he tweeted that ridiculous tweet about the bond market. Who's going to buy them now? Meaning, who's going to buy the bonds if the Fed stops its QE? So in that one simple tweet, Gross displayed his complete lack of understanding of monetary policy, of government spending, of sovereign currency systems, of free-floating exchange rates. In other words, the funds that are used to buy treasuries come from government spending itself. That creates the dollar. So when he said, who's going to buy them now? He didn't even understand the fundamental concept that the government spending causes dollars to pile up in the banking system. And those dollars are just swapped for treasuries, which is treasuries are basically just dollars with a coupon and an interest payment. Anyway, I'm getting sidetracked here. The reason why I'm fading Jeff Gundlach, the new bond king, is because he's saying stocks have a 2% upside and a 20% downside. And he's now saying risk assets, like commodities and oil and metals, they're done. The rally's done. And I totally disagree. And one of the reasons why he's saying that stocks have now a 20% downside, which is preposterous, is because he's saying the interest rate hikes by the Fed will be dicey, in his words, dicey. The problem with all these guys is they look at everything from a very one-dimensional perspective. For every debtor, there's a creditor. For every liability, there's an asset, right? For every spender, there's a saver. So even if interest rates go up and if that hurts debtors, the income to creditors, the income to savers, that goes up as well. I mean, Gundlach doesn't even consider that. The other thing that I think is interesting, and I don't want to run too long on this video, but the other thing that I think is interesting, he says, buy gold, right? Even though he's saying risk assets, metals, oil, commodities, they're all going down, they're peaking out, but buy gold. And by the way, you know that I've been bullish on gold, but I've been bullish on gold for what I think is the right reason. That when the government raises prices, as in setting interest rates higher through its central bank, that's a price increase. You're literally fostering inflation, and that's why gold's going up, and that's why I said last year, buy gold as soon as the Fed reverses course on monetary policy and starts raising rates. It's been going up ever since. But Gundlach, how do you buy gold? He says, I want you to buy, he wants people to buy gold because people are losing confidence in central bank policy. They've never had confidence in central bank policy, yet, gold's been going down for 5 years or 4 years. So his arguments are wrong. I don't care if he's the bond king. In full disclosure, I don't manage billions of dollars. And if that discredits me in your view, well, so be it. But I'll put my understanding of economics and the functioning of the monetary system up against anybody. So I'm fading the bond king. Enjoy.